My name is Nick B, and let's jump into this week's futures overview. So, I'm going to start with the Forex Economic Factory calendar. Monday, Tuesday, we don't have much going on in terms of news. Wednesday is going to be the big day at 8:30 a.m. EST. We have CPI at 1 to 10-year bond auction at 2 p.m. We have FOMC meeting. So Wednesday is going to be a big day. Thursday, 8:30 a.m. core PPI, unemployment claims. 30-year bonds, and then Friday we have consumer sentiment. Okay, so it's going to start off as a quiet week, but let's see kind of what happened last week, and we'll go from there. First and foremost, oops, let's remove everything. Okay, let's blow ES up. And again, we're looking for direction. What happened? Okay, so let's start off with plotting out the highs of 53.33. That's definitely going to be an upside target of ours. So we have this floor here. We have support that we made over at 51.91. When you trace it along, the last higher low was at 51.66. So I'll plot it just in case price for whatever reason decides to wick it. I would say that 51.67, 51.70 area on ES is the equivalent of 18,050 on MQ, and we'll talk about that too in a second. So we have that here. So okay, so we have a floor. I see the middle ground already, and it was this all-time high over at 52.55, which was the breakout, and we are currently above it. So I'm gonna go ahead and slice up this floor into two floors. So, okay. So now I have an idea on the daily that as long as we're above, what is this? 52, 53, 52, 55. That's actually a level we've been talking about for the last 2 weeks. As long as we're above it, we have a chance to retake the previous lower highs that we made, for example, in the area of 53.08, and then possibly get to 53.33 and break out above it. So let's assess, what happened last week. Last week, yeah, we got a little bit of selling, but it wasn't bad enough because if it was really, really a sell, if we're really, really shorting, let's take out 51.67 and I'm interested. We can head down to 5100, but really the next base below 51.67, 51.70, your next base is at 50.60. So that's a decent area to target. So I'm going to go ahead and place an alert for the week over at 51. We'll do 51.70. I'll keep an eye on it because maybe, if we do for whatever reason come down into that area, it could give us an opportunity for a dip buy. The other thing is, for the GAR guys, signal side, we're going to slow it down. Going to take it nice and easy. So, okay, so that's going to be our downside alert. Again, we know that the middle ground is 52.55. Call it sentiment. So if we're below 52.55, yes, we're leaning more to the downside. The whim would take us more towards the downside, but above 52.55, the whim would point us to the upside. The clean moves are you get a break of 53.33, you close your eyes and you target 53.50. That's a guarantee. My upside target above 53.50 is 53.80 and ultimately 5400. Again, below 51.70, 51.67, very possible we see 5100, 50.60, very possible because that's the next base we have here. Again, let's talk about, so we got the text out the way. That's kind of the fundamentals that I'm seeing. Now let's talk about the indicators, right? Because I do admire the 20-day exponential moving average and what does it mean for me? So the fact that we did manage to get a daily candle close back above 52.35, which is my 20-day, gives me more of the probabilities that last week was a false breakdown more than, an actual breakdown. Now, again, if we do break down, 52.35, again, it's going to give this feeling that we can continue lower, but ultimately the main plot that's holding us up as support here, I think, is 51.70. That's gonna be the sand in the line. That's gonna be the line in the sand support where that breaks, great, we can short it. Everything here right now is on a whim. That's the word that comes to mind when I'm looking at this here. I'm gonna start breaking this down to the 4 hour, but you're going to see how I may or may not stutter in this thought process here really quick. So again, so we have the facts down. All right, let's pull up the 4 hour. All right. First thing I see on the 4 hour is we are above the 20-day EMA. And again, I hold the 20-day, especially on the higher time frames, to a high regard because it's just been proven. It's an excellent support. You could see again real quick on the daily. Every time we touched up on it, bounce, 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 bounce. So again, the fact that we closed above it, as long as we can hold it, great. We could, bounce off of it. But trading is, probabilities. We're just going over what has the higher probability to hit based on levels here, based on past performance. Again, the safer, I just want to reiterate and kind of put that out there. 53.33, that breakout is safer. You can close your eyes and go long towards 53.50. Below 51.70, I think you can close your eyes and short it down to definitely 5100 as the first target. Everything here in between, just have that note that it's a may or may not. And we're going to see this on the smaller time frames. Okay, so let's get to it. Um, Again, 20-day, we're above it on ES, but we're between the moving averages. Usually, when price action is between the moving averages, you don't have certainty. You don't really have a sense of direction. Now we could say, well, we could get above 52.73 and go long and target 53.09. Yes, you can, and you'd have a stop slightly below 52 52.55. You would have it slightly there. That is a possible setup, but your odds are very 50-50. It could just play a little game and we reverse. My bias says buy it. My bias says this breakout here at 52.72, buy it. You ride it towards 53.10. It makes sense to me. And then a break of 53.10 is another setup to target 53.33. But again, the problem is it's a whim type of territory. You could end up having an intraday reversal. It could give us hope that momentum can take us higher, but then reverse on us. Again, we have CPI. The action really begins in the middle of the week. So again, we'll see if it makes sense. If we, let's say, come down to 51.70 and for the life of it we cannot get below it, or we're hovering around 50, 52, 55, and we're just above it, we cannot pierce any lower, we might take a bite on that. But again, I'm more looking for give me a break of 53.20, 53.25. We'll get ready to go long and target 50.50. And again, a break of 51.70, great. We could go to the downside. I don't really need to break this down to the smaller time frames because something on the intraday, if we are sitting there and just watching price action, it's going to be a whole lot of waiting. These aren't really the real moves. These are just moves on a whim. This is a breakout. We could go for it, but the last we've been seeing a reoccurring pattern in this environment is we'll get a push. Maybe we'll get to 20, 30 points. Last week, if not, I believe all our MNQ longs they went green at a certain point, but we just held too long. So it's possible in this area, we break out a little bit, it pushes, and then price reverses on us. I'd like to avoid that too. So I'm just taking it easy, but definitely you could do that. That's definitely a scenario. Personally, something I might snack on, but let's move on to NQ. Daily and all right, let's unpack NQ. Clear drawing set. All right, starting fresh. Okay, let's identify the floors. So right away on the daily, our 20-day EMA is over at 18,313. Okay, and it's shifting. So for NQ, we are still above it. Okay, let's start plotting. So always for me, all-time highs. Okay, so last week we came down to as low as 1850, 1851 area, bounced off of it. You could see how it lined up to not last week's, but previous higher lows over here in this area. And if we keep tracing it along, this area held as a bit of a resistance for price for a little bit until we finally got a breakout. So I'm gonna go ahead and I'll place it at 18,000, I think. Because if we spill below 1850, that's still going to be basically 18,000. The other reasoning for that is, um, on the daily, the 50-day exponential moving average actually lines up close to 18,000. So this makes the most logical sense of this being the floor that we're in between for direction. Below 18,000, the next, support we have is 200 points down. We could probably squeeze 100, 110 points move to the downside on that clean, worry free with proper risk. And, the next move up to the upside is a break of 18,709 and probably 18,800, 18,900, 19,000 is definitely going to be the close target, my upside target. But it's not all going to happen in one shot. I think that if we have any chance of retracing this week, even towards 18,709 on the NASDAQ, I think at most maybe we spill an extra 100, 120 points over the highs of 18,709. The reason I say that is because it's, for 3 days worth of work or even 4 days worth of work in the market, it might be a little bit of a climb up here, especially when 2 days is going to be just a whole bunch of waiting. So I want to mark off on here 18,523 because that's a previous marker of a previous all-time high that we can use as a target. But at the same time, when we break this down on the smaller time frames, it's going to give us a better idea of what's the middleman line because we have lower highs that we can rely on, which is around 18,566 and the lower highs of 18,626, I believe it is. So let's take a look at this on the 4 hour. Okay, perfect. So this literally shows me exactly kind of what I'm anticipating. To go for anything here on the intraday, you know, you see 20 points, you take it, you move on. If you see 50 points, you most definitely take it and you move on. In this area in between here, I don't think it's going to be as easy as, some of the intraday moves because that's more of a momentum breakout. We're getting direction, and that's just not always the case on the intraday. So I would say let's evaluate this from kind of the riskier side towards the safer side. Safer side is you most definitely can go long on a break of 18,627, which is these lower highs right here, because it's almost a guarantee that you're probably going to head up towards 18,709, and you can have an appropriate, stop loss slightly below the lower highs of 18,570. So you could place it at 18,550, you go long at 18,627, you target 18,709 area. And if you get a break of 18,709, you instantly move your stop losses probably 20 points below the previous all-time high. So it's a comfortable pace that you can trail price if it decides to explode. That's usually the case. Or we wait on the breakdown and a candle close below 18,000 and you short the hell out of this. I mean, you shorted definitely 200 points down towards 18,800. But again, what are the probabilities of that? If they wanted it, why didn't they do it last week? You were right there. On the intraday, they had three chances to break below 1850 and they just couldn't do it. So that's kind of questionable. That makes me question, kind of the direction. If anything, on the side, it's feeding my bias to say that we're going higher. But again, bias aside, because that's kind of what sucks you into the loop of either over trading or getting an obligation or feeling an obligation like you have to get in on every move. And that's just not the case. That's also something I realized on the performance. It's not about every single intraday move, it's about just getting the move. And we're going to focus on that moving forward. I mean, on the intraday again with NQ, I can talk about, the lower highs of, excuse me, not the lower highs, the lower lows here of 18, 200 and then 18,570 as well. And yes, on the intraday, on the smaller time frames, they count. You get a breakout of 18,570, you're probably heading to, 18,627. But the deeper question that we have to ask is it worth risking my dollars here? What are the probabilities? And if you're on a 50-50 kind of area where it's a one-to-one risk to reward ratio, is it worth it? Probably not. I do like, again, I do also want to mention on the intraday, I do like that we somewhat used 18,200 of a support beam, but again, it's very wishy-washy here. On the intraday, 20 points, you won. You have 20 points on the day, you make that, you won, you're done. But then on the higher time frames, when we're looking for direction, for example, either 18,709 or below 18,000, you take those moves, and those you could dug out a little bit longer, and hold through with a swing if possible. Some of those setups you're able to swing, but we'll see what we get into the week. Real quick, we could take a look at crude. Let me see what that's been up to. Oh, I have it right here. Okay, so my last support that we broke out of was 86. Let me blow this up. Okay, so well, let's get rid of this here, and I'll leave this alone because, well, let's just explain. All right, so last week we were basically below this 85.94 level, and that's a previous lower high. And at the same time, ever since we took out 76.20 and we were able to hold above it, technically, as long as we stayed above that level and kept going higher, we were making higher highs and higher lows, in turn showing us that we're having a trend flip, a trend change, basically. And the trend change can follow all the way up to the highs until we either get a continuation of the trend or somewhere along the way, somewhere here, midway, or at the top range, trend decides to reverse, which means breaking down two previous um, higher lows. So if, for example, as we're climbing up, if we break below 80, that's the first nail in the coffin. And then below 76.80, yeah, it's good night crude. It's probably going to head lower. But in this case, again, we have a trend to the upside, and we just broke out of the areas of 79.81, making new highs, new session highs of 83.12, getting above the wick of this low at 83.68, and we just took off straight to 86. And above 86, our next resistance is over at 80, 89, 89, 88. So this is not a bad area to go long, but the problem is, all right, let's look at the big picture on the daily. The 20 day, my 20 day is over at 82.94, and I do know that crude likes to play games. So if I want to kind of seal the deal and let's avoid any games with the price action setup, if you were to go long here, your stop must be slightly below 82. And then your target is 89. So you're targeting about 300 ticks to the upside and you're risking a lot more to the downside. So it's not worth it. Now, if crude comes down towards 83, maybe in the areas of 83, 84, maybe that's worth a bite because now that would probably zero in our risk management. I'll make it a little bit tighter with the stops. And then we have a little bit more leg room to go long in the areas of maybe 83 to 84. You have a wide stop slightly below 82, I would say, maybe 81 and a half or 81 even, just to be safe. And then you can target 89. 86 would be your first kind of meter or your gauge, basically, because if you go along in the areas here and you get a break of 86 and price holds above it, more than likely you're going to get a continuation towards 89, 88. At least that's what I see with crude. So if we get that opportunity, we'll execute on it. But again, no rush. No heavy trigger finger. We'll see kind of what unfolds into the week. Not expecting too much out the gate, but we'll be monitoring. We'll see what we get. Have a solid trading week ahead.